Hello guys, glad to have you on board again. Today we'll start right away with the cryptocurrency sector. Not that big of a deal, not that big of a change either regarding the Bitcoin scenario. So I'll just go straight to the conclusion in here, as most of the argumentations has been taken care of in the previous videos. So we're going to save us some time here. I still forecast the price to do either a nice bearish breakdown to trigger some volume pattern out there. Basically, the volume is going to have to surge and rise above the moving average with a violent bearish outburst heading into the major support area, which is below 5,200, leading us to potentially down to 3K. We probably shouldn't go lower than that, which means in between those two prices we should be able to find a bottom in a long-term perspective. But the only viable significant information that might be leading us to the right direction will be we should have a historical volume. So if we're going down, it must be a wrecking out of all the short buyer of the long-term buyers who've done that with leverage. They're going to be stopped out right in the same trading day with a violent outburst in the downside, and that volume should be enormous and rapidly bought out whenever we found the end of that pattern. So it's basically triggering all the stop losses one by one, and whenever we go down, all the available volume will be bought instantly. So it should be a V-bottom structure, very fast, brutal. Option number two, we just do nothing. The volume keeps on remaining below the 20-day average. Just give me a second to just give you the magnifying glass. So yes, either we remain in there, as you can see, look at the magnifying glass. We're staying below the 20-day average for a long time now, and as long as we keep on doing this, I'm okay. We're not breaking resistances, we're not breaking support either. We're basically dying into the desert crossing phase that I already talked about for months. So we are nearly making it, but we still need further information that the volatility is finally down. We've got lots, and when saying this, I mean really a lot of bearish volume demand. So let's see this clearly. We're going to use this, which is this one. So it's Bitfinex volumes only. So as you can see, historically, the last time we had that much bearish demand was the last time we made the bullish engulfing pattern. The bullish squeezing pattern, in which we squeezed all the bears who were aggressively selling the market back then, and the market, everyone was just saying, okay, we're gonna fuck up the 6,000s, that's a certainty. So every retail traders were speculating for more downside, and the market just took him to the wrong foot pattern. And we might be able to have the exact same thing for us coming in the next following weeks. Doesn't necessarily mean that we're gonna break the resistance, just means that at that point, many unexperienced retail traders are trying to sell a market that is upon a support area. We're working support area, clearly we are, and everybody is demanding for the price to go lower. Whenever you have this, can either be a binary choice in which either we go very brutally downward or we just don't and we fuck them up. If price isn't moving as retail traders are rising demand for the bear side, means that somebody is buying that volume. If smart money is buying the dumb money we're trying to sell right here, we could just very well have the desert crossing phase and we'll never ever get to the 4K. And we'll never get to that area simply because we don't have to. We're just doing this to terminate a crushing pattern. We're trying to find kind of a balanced price in which the smart money is going to take over the speculator's money. And we can do it we've got two options. We've got more than two options. It's never a binary choice when it goes down to markets. We always have infinite possibilities, but the major two choices we have out there, as I said, is either wrecking up all the long-term buyers who've been made a buy and hold, but we're using leverage. So those guys have a stop loss. It's what we call the margin call. At some point, they won't have enough margin to maintain the open position, so they'll have to be releasing their Bitcoins. So selling Bitcoin has a very interesting price. This is the price that the smart money will buy them out. So that's option A. Option two, smart money somehow figures out that right now is an interesting price already. So it's not necessarily to go through 3K, 4K or whatever. It's just we're buying them out right now. They want to sell, we're buying. That's simple as that. They have low volume, but we have patience. So it's either we do a brutal and violent move, or we just do nothing and we just absorb the bearish demand day by day into low volumes until we took it all. And whenever we'll have enough volume that we needed to eat out there, we'll just wreck the sellers by making a bullish squeezing pattern. So this is the two options we have. For now, I don't know what the market will pick. All I know is that we don't have enough information to trade, so I don't trade, and I remain on that perspective. Same thing goes for Ethereum. We haven't changed anything. Yesterday was not that big of a bearish day, but at least it stopped the first bearish signal we had days ago. 2 days ago. So nice bearish signal right upon support. The market is closing at the low after opening at the high. So we basically made resistance to support in a single day, and now the market is dying in between, which is a good sign. It's a range activity pricing instead of a bearish trendy activity pricing, which means we have signals that the bears are exiting right now. We have signals that we're building ranges. I forecast the price to exit bullish after those ranges, but I simply don't know how long this range will take. So as long as we remain below resistances but above supports, I'm fine, and I just don't care about what the price is doing in an intraday basis. It's basically flushing all the stupid traders out there, and we're just basically waiting to have further informations by either breaking up the resistance or breaking down the support. As long as we haven't done any of those two, you shouldn't be concerned about the prices. We've got a resistance, we've got a support. Just don't fucking trade in the dumb area, and we're right into this. So moving on, we've got nothing else to say. Ripple has been surging yesterday for some reasons. I really don't know. Probably there is a market catalyst or not. We don't necessarily need one. All I can tell right now is that we have a possible double bottom structure out there. Could be long-term buyers making some kind of buy wall out there. Could already be something else. Because as you can see, back then we had a double bottom structure, the exact same, and we fucked it up to go lower and far lower as we divided price by 2. Back then we were testing the 0.40 support, or we've been dividing those price by 2, heading into lower valuations. So it could very well still be the case. In here, you obviously don't know. All I say is that I'm noting that we had a bullish candle yesterday. Is it the kind of thing you want to FOMO trade? Fuck hell no. You don't want to do this. It's just range trading activity. All you care about for the price reaching out to resistances, pullbacking, and breaking them up by not making new lows in the meantime is what you want to have it. So in here, for now, we've got nothing to trade instead of just waiting to get those range price actions broken up. The only asset I think is tradable by anticipation into long buy and hold scenarios is the Ethereum, and I stand on this for now. It's the only one that have a technical perspective that allows a decent risk management to trade. All other assets, Ripple, Bitcoins, and anything else that I've been studying, because of course there's lots of altcoins I haven't been studying, and I don't want to do this. I want to remain to the strongest one, the top 5, and I'm not going to go below this. It's all just Bitcoin and the top 5 altcoins that I'll be interested in. Others I really don't care. It's too risky to get into low value, into tiny market caps or things like that. So Ripple, Bitcoin's basically waiting to have further information. So we don't know if we're going to have more bearishness in those or not. It's just that we already have reached out to really long-term interesting buy and hold prices for Ethereums. So I've been making those buy and holds and now fucking waiting for further information as well. So there's not a lot to talk about in the cryptocurrency sector, as there is not a lot to trade actually right now. Most of the time, this is the answer you should get when you try to analyze a market. There is nothing to do out there. Okay, and that's basically what I say right now. So moving on from the general asset classes, and we're going to have a look first, I think, at the forex market. As today Mario Draghi is speaking once again, I think speculators are shorting the euro dollar, and I have some reasons to think that first of all we should and might have some kind of volatile activity out there. We're making upper shadow candles 2 days in a row, which is generally not a good sign. So either the next day is going to be brutally bearish and triggering the speculators trade to be validated. Option number 2, we're going to wreck them first and go afterwards, which means I still have clues, and I don't want to be too much into bearish euro, as to me euro is bullish in the long run. It's just right now what I'm interested in is buying the pullback. So selling the euro is not necessarily what I like. I would like to see this because you know I'm bearish leveraged on EURJPY, which means bearish euro pretty damn fine to me. I really would like to see this happening. It's just selling euro dollar might not seem to be a good choice to me. So I remain bearish on my EURJPY for the reasons you already know about. I still have confidence on that market, and I'm taking quite some risk out there, but I'm only risking previous gains, which is the only reason why I'm taking risk above a 3% loss on that risk on that scenario. I'm holding bearish leverage on the market that is giving bullish cycles and bullish signals, which is a worst case scenario. I'm taking the risks to being to the wrong side, into the wrong footing kind of pattern, and if that happens, I have to suffer a huge loss, but I'm ready to take it. Instead of taking a general 2.5 to 3% loss, I'm ready to take a double in here, go from 5 to 7% loss out there. I'm ready to take it, but only because of losing previous made gains on that market, and that's the only reason I'm getting ready to get an extended loss out there, simply because I think that we're bullshitting here, and that to me euro remains on a pullback demand in here, which means I should get to gain on my euro yen. So this is why I'm maintaining those positions opened. So waiting to see this today. That's basically the only market catalyst. Mario Draghi talking, and we're going to see how the market reacts to this during the US session that we already just started. So GBP USD is something I've been managing today. Been taking partial gains as we've been making that candle, suggesting that right now the bears are taking it over. I mean, the bulls are losing strength. We've been reaching to the 100% extension. Sorry, I still have some problem with my throat, so I have to drink a lot while I'm making those shows to just avoid coughing a lot. So anyway, right in here, I said we should have some kind of pullback in here, and I've thought that as we were piling up below the 100% extension, we would probably have a bullish outburst, reaching out to the next level, which was 127. And apparently the market decided to do otherwise, simply because we tried it very well, perfectly as expected. So this way, I basically said, okay, we're going to reach out to this. And then I was surprised during the morning to see the market brutally reversing ahead of Mario Draghi. So I decided to trigger a taking profit out there. That was the case. It's a partial taking profit. I remain bullish on GBP USD, no questions asked. The thing is that right here, we're going to take the number and lower it to 2.15. Simply for that reason, I think we might have a pullback in the daily chart time frame. Basically made wave 1, 2, 3. We should have an overlapping pullback kind of wave. Sorry, not overlapping. We should have a deeper pullback, probably something comparable to what we have in the wave 2 pullback in here. So violent pullback to be expected. We should enter into wave 1 territory. And remember that tip I've been giving you back then. When we do leading diagonal structure, meaning ABC trendy structures, whenever you do this, generally wave 4 is retracing back to wave 1 previous resistances. Okay, so guess what? You had a bullish signal in here and a bearish one, so we've built a resistance. You can clearly see bullish impulse, bearish resistance, bullish pullback, and then we got to create the resistance. So we got a resistance in here. We're probably going to test this one, but we're going to break it down, I think. I more likely think this one is going to be the good one. So you basically take this. Let me just gather this. Okay, you take that. You take all the upper shadow candles, and I think this is where we should find the bulls, in that area. So this is where I want to buy, and I think this is where we might have the pullback. So what we're going to search for is, considering that we're not going to make new highs, and that's pending. So far we still don't know about that. If this is remaining to be the bottom, what we'll have is generally a wave 2 target, which means we're going to look forward for 61 to 76.4% retracement. One of those two is going to be the good one. We've got the pricing support in between, so I think the market is going to test one of those two. Either 61 will be enough, or we're going to have to go to 76.4. So it's in that area that you want to be seeking for bullish signals. So first of all, wait for the price to build a retracement structure. Wait for the price to get into the blue area, and then wait for a damn bullish signal to trade. that will be a bullish wave to come forward. But I think right now we're kind of a timing in which all the euro currencies, eurozone currencies, might be about to retrace for a few days. Kind of a technical pullback to just fill up with bulls again to get into more bullishness on those markets. Yes, I remain bullish on euro and GBP. It's not a problem out there. It's just that I think we might have more interesting prices to buy. So I'm triggering the taking profit as expected. Other forex markets that are doing well now is the USD, MXN, and CNH, doing according to the plan, not moving aside from this one. Still have the yen trying to work its way up after reaching to very long-term interesting prices. We've been going as low as I was expecting it to be. I'm still waiting for a double bullish signal. We're still cannot manage to find. We've got bullish divergence clearly visible out there, but momentum isn't triggering any kind of pattern out there. So we really need to wait to have clean daily chart confirmation in there, which means the 2-hour chart time frame doesn't give us any room to buy. We have no bullish signals, so we've got to wait either for a bearish signal to get invalidated, which we don't have so far, or we're going to have to wait for a bullish candlestick pattern in the context, which means the context is daily chart. I don't see anything suggesting bullishness out there. We're closing at the lows, so we still have to wait either for a bullish structure in daily chart or bullish signal into our chart time frame. So we've got a tiny double bearish in here. First things first will be to get there and making candle closes above those price to eventually forecast. Oh, god damn it. We have something interesting right now. So we're going to see how it goes. We'll still have 10 minutes to close that candle. But if the candle closes like that, we have double bullish from sine wave. Sorry, so it's not a double bullish, but it's a bullish signal with the confirmation already in the same time. Coming in sine wave. Still requires 10 minutes of patience to get that candle closing. I remind you that closing the candle is necessary for the signal to be validated and remaining on the chart. Signals can come and go into the currently trading signal. So you might be choosing to take the risk of buying before the candle close or not. That's up to you. I won't in here because we don't have momentum confirmation, but we do have a visual bullish divergence. So I can consider that momentum right now is viable to trade bullish. So if we do have the sine wave confirmation out here, might be good to consider this viable to trade. But as this is not a clear and clean double bullish signal, if you do take that trade, first you need to have the double bullish, which is no longer the case. You can see just one tick to the downside took it down, one tick to the upside is triggering it. It really is a precise tool. Sine wave is a fucking surgical tool. This is how it goes. So things needs to be really precise. So if we get that pattern triggered, I'm ready to take a bullish action on the yen, meaning reinforcing the yen position, tiny reinforcement, but the stop loss for those reinforcements must be broadly set because this is not a perfect signal, and whenever this is not perfect, means that you need to take that and assess that risk into your risk management, which means broader stop loss than what you would do in a perfect double signal. Alright, so yen is to be watched very closely today. I remind you that we had the BOG during the night. Apparently the market decided it to be neutral or neutral bullish, but right now we're going to see how it goes. I would like to see a nice bullish reactivation after BOG we had during the night. For now we have nothing. I want to see how the US market is reacting to what the BOG said. Now moving on to Wall Street guys, still the same. We've got NASDAQ hesitating, some kind of Apple trying to test support areas, but I don't see that much of bearishness right now. All I see is that we're trying to trap some bears, so don't get in there too fast. If this thing goes down, it's gonna go down for 3 to 40%. So if that's what's about to come, you don't want to be messing around for 0.5% return. So you basically want to wait to have a clean side that the market is going down and is going to crash. Right now, I have nothing close to this. We had rumors of China going against Wall Street big market caps, but that's rumors so far. So we got nothing suggesting that the Chinese government is about to retaliate. if they are doing it, you can be damn sure it's going to crash out. The thing is that right now we don't know. And even if I have strong conviction that we can crash, remember what I'm teaching you guys. The market is pure irrational and can remain like that for longer than you will be liquid. So whenever this comes out, even though you think there is 99% chances it's going to act like this, there is still 1% chance it doesn't, so you don't want to risk it all. You never ever risk it all into market trading. So if you thought, okay, Ethereum is confident, so we're going to fuck it up selling Apple with leverage, I'm nothing close to doing this. I'm selling Apple, but I'm far from using leverage right now. I'm really waiting to have further confirmations to get in there. And whenever I'll do, and if I'll do, you can be sure I'll be transparently saying it out loud, which is not the case right now. So we've terminated with the forex when we'll have covered AUDNZD. We're back at resistances. I want to see that market fucking breaking them up. We're still waiting. We have a weak bearish cycle right now, so I expect the market to go higher than that. As we have no momentum resistance right now, so I think the price will just go there, finding for higher resistances prices. It's still not a won battle. I remind you, that we'll get to some more bullishness and bullish confirmation when we get in the upper boundaries of that trend channel, which is for now still pending. So this is what we have. We need to get to the mid-trend channel, work it out, and this is where we'll get the trendy market in which all the trend traders will get up here, and of course all the speculators will take huge gains. So for now, strong confidence, but still need to have the price reaching out to the trendy area to get to lift that number to the maximum value. That's basically it. We're having a look at 10-year yields. We're setting ourselves above 3% once and for all. We've been making multiple candle closes, so that's a done deal. That's a sealed deal. Yields are rising. Equities are rising, but the risk is rising accordingly, so yields are upward. And we'll see how far this can go, but for now, and from what I can see, we're breaking resistances. We're nothing close to making pullbacks. So the breakout is there, the target is there. As long as we remain in between, you might want to be bullish. Until we manage to invalidate the breakout, the bond market remains bullish, which means bonds are sold. I mean, the yielding goes up. So the bonds goes down, okay? The T-bonds are sold. The 10-year yields is rising. You need to get that. I hope you do get that. So same thing goes for the German yields. They're rising for the same reasons. We're not yet breaking resistances into the 10-year German yields, but we're about to do it. And I think that this is going to be an accelerating level in here. As this was a double bearish that we are now about to break up, so which means probably going to have to take that range, extend it to the bull side, and probably going to have to reach out to the target number 2, which is, let's say, between 0.66 to 0.72% yielding on the 10 years on Germany. So I expect the price to go there, just don't know when. Can have some pullbacks, I don't really care about that, but as the US is setting itself above 3%, I see no reasons for the German economy not to do the exact same thing at an even faster pace. That's it. VIX is pulling back, and that's what I was expecting. Let me just delete that. So that's great. As I said, we should have 2 bearish impulses. That was part of the plan in terms of waves expectations. So we have that second bearish wave, so I'm ready to buy some VIX in the next following days. Not just right now. I'm waiting for a slightly better price. I want to see that gap closed, but right next to 11.3, you can clearly say I'm going to buy futures VIX just for a tiny period of time, just going to buy for a couple weeks of bearishness, or let's say 1 week or 2 tops of bearishness, but I expect the market to just make a wave, break a resistance, so you might expect some bearishness into the US equities in the next following days. Even though everyone thinks this is going to be bullish, I think we're going to have some pullback, eventually a trap that you don't want to sell. So that's the reason why I don't want to get myself into too much shorting of Apple and things like that. These two can go pretty bearish, trying to trigger your trades, but you don't want to suffer getting in there too early. Otherwise, the market will take your stop losses in some kind of brutal pullbacking. Okay? So don't be too violent with those assets. If you do, you're going to get caught into something that is going to chase your stop losses right after. Regarding gold and silver, couple, we're still trying to figure out what's at play. But anytime the U.S. market is going to suffer some downside risks, the stock market I'm talking about, we're obviously going to have breakup of resistances in gold and silver, but right now we'll still need to patiently wait for this. U.S. oil is just messing around once again. We're just trying to make an additional pullback in there, but we're not making that big of a bullish outburst. Clearly sounds like a range structure or wave 2, so I think we're preparing for some more downside, but just still trying to figure out what the timing is to get there. And obviously, I think everything suggests that the U.S. stock market should try to break a resistance, fail it, and pull back brutally. So we should have some bearishness, I think, in the U.S. indices in the next few days, followed through by the U.S. oil and probably the yieldings and things like that. So we'll see about that. I don't think getting aggressively bullish on yields right now is the right choice to make, but using yield as a cover by selling in US indices, selling US oil, buying gold. So I think as I'm doing all of this, my portfolio is strictly orientated toward risk rising, and in order to not put every effort in only that direction, I'm also buying yields by selling bonds just to make sure that if I get wrong-footed somehow, obviously the bond market is going to surge. So for some reasons, I use that as a cover, okay? I'm assessing that the risks should go up, but I'm also remaining bearish on T-bonds and 10-year yields in Germany for that reason. It's just that if I'm wrong, those markets will provide huge gains, and that will be some kind of a cover for the big losses I may take, because of course if we're surging in Wall Street and all other asset classes, all other major equity indices, means that I'm probably going to be stopped out on the yen, so taking huge loss out there. Also might be stopped there, have to reduce regarding gold and things like that. So lots of scenarios will be invalidated. I want to have run right, and having the yields is the one that will obviously be right if for some reasons the stock market wanted to surge. The thing is that if you have a look at GPN, yesterday was a hell of a session. Really hell of a session. 2% day, heading into levels that we haven't seen since the start of that year, and things suggest that either this is going to be the fucking biggest trap ever, and if the market is about to invalidate, not making new highs, that means we might have made first corrective impulse wave, and we will be about to make a second one. So it is not yet a won battle. Clearly it isn't, but you don't want to be too aggressive in here. You don't want to sell a 2% up day just like that. You might want the market to just wait and digest that market move for a few days, and then eventually, if we have some bearish signals, we take them. I'm ready to short. Really, we're on a technical level. I have a strong conviction that the market is just fucking up in here and that this is a fake breakout, but you don't want to be too aggressively bearish in here. You just want to wait for the market to digest in here for a few days. And if, for example, if we do have a bearish engulfing structure, I'll be ready to take some more bearish activity out there. But I'm strongly and sharply looking at the US indices and worldwide indices right now. The stock market is really passionating right now, but very dangerous as well. So you might want to act fast, but not too fast. You need to find the right balance in here. Getting too aggressively bearish on some assets might cost you huge losses because of many traps that we have to the bear side. But on the other side, getting bullish right now could be the biggest trap ever, because if we were about to fail, we will fail for multiple months, which means you probably will have to buy market tops that you won't be able to see for probably years afterwards. All right, so that you know about that. We're already half an hour into this, so I'm just going to stay there. Remain very, very cautious on the US indices. I don't see them surrendering today. I think we're going to try and make a trap. So let them go up today. Make an upper shadow candle or anything like that, and probably try to get some bearish activity tomorrow, but not necessarily today, okay? Don't expect and don't be too bearish. And wait for signals. Remember that selling right now is speculative, and whenever you speculate, you want to limit the risk by using the indicator signal and using the strategy, and you want to remain low leverage until you get confirmations in where you're going to put more money and get to forecast yourself into trending and making huge amounts of money. Not huge, but let's say this is where you make profits. Whenever you forecasted something to happen, it does happen, and whenever it happens, you're comfortably set up. You've been buying speculatively or selling speculatively, and you can pile up positions, not taking heavy amount of risk by leveraging the position stupidly. You just get into pyramid schemes like kind of trading. You're putting more money as we go on, but as long as you're proven right, you want to put more money in the market. You just want to not put it in a single shot. You just want to make multiple shots at the market as long as it goes into your direction, and whenever and at the point it gets to your target, when you are getting target reached out to on a leveraged scenario, this is where you take huge gains. And this is how I see trading. You don't necessarily want to win every day. All you want is to make the big shots that make a difference out there. Sometimes I take 10 losses for a single gain, but whenever the gain comes up, really is erasing the 10 losses, the 10 tiny speculative losses, and is tripling that amount. I can take 40% on a trade, and of course, when I say I take 40% on a single trade, I'm ready to lose 2 or 3% multiple times. Not 10 times in a row, but I'm ready to take 3, 4, 5 speculative losses to get a 40% return in the end. And generally, I don't do that. When I take 3% loss on the speculation, means I've gone maximum stop loss, which is generally not the case. I generally take a 1% loss. That's how it is for a 20% gain. So as you can see, I can lose 10 times. I don't really care. All I care is getting the 20% return in the end. Okay? So that's a thing you know, but I really want to remind that to you each and every day, because this is what makes the difference. This is something that you will be hardly thinking to be true till the day you get to think it's true, and you'll find it your own way, and this day you'll know what trading is about. And the fact that I know it's counterintuitive to think that for you, being a right trader is going to be being right, being wrong, and the one that is being right, that is proven to be right most of the time is the best trader. It's obviously wrong, and most of the time it's even the opposite. Those who are right often are generally bad traders. It's not that binary of a choice. Of course, good traders will be right lots of time. Also, the thing is that generally trend traders will be right even more than speculative traders. But those who actually make money are speculative traders. Trend traders doesn't make that much of the money. They can make 15 to 20 to 25% return on a year, which is negligible unless you have a huge amount of money. And if you do, as I said, don't take risk. If you have the luxury to have $500,000 or anything like that, you just don't want to take risk. You don't have to. You just get the money to someone who does the job, who will be trend following for you, and you just take the money and leave out there. I mean, if you have that luxury, don't get into trend trade. Don't get into aggressively trading. You don't have to learn speculation. You just have to leave out of your money, take the free cash, and enjoy life. And don't get yourself into learning how to speculate. So anyway, I'm going to take the questions right now instead of wasting your time and mine bullshitting out there. So just me switch to English reviews. And so, command, you're saying ETH wasn't a bubble. Yes, I say that, and I stand on this. It wasn't a bubble. The structures and price suggest a lot of exhaustions. We've gone way too far in terms of pricing. Certainly is. But the way we got there, I mean, there is, consider it that way. I'm just trying to search for a viable image to express my feelings out there. Okay, let's just consider this a mountain, okay? You're going to climb the mountain. You're going to go up there. You're going to go from from the bottom to the summit. That's how you go. Then there is multiple options to get there. You can take the helicopter. You can just go straight to the summit using machinery, okay? Or you can just get yourself a backpack and walk your way up. Okay, a market that is walking its way up to the market top, to the summit, is going to be a trendy market. Okay, because money got in repeatedly with waves, ups and downs, peaks and valleys, and you got yourself up to the top, you put in some effort, you took the time necessary to build up confidence in the market, you basically had structures in price. This is what we call a trend. Okay, so you've been trending up, which means you can remain at the summit for a long time. You're not necessarily going to lose all those gains on the way down. Bitcoin is different. Bitcoin has been taking it's not even taking the helicopter. I mean, Bitcoin has been taking the jet. It's a jet engine out there. It's been leading us to the summit. It was more than ever stupid than you could say. Lots of retail traders and experimental traders got in there. Obviously, they got into Ethereum as well. But I see the difference out there in the pricings. And I've been expressing this, and I can say no more than I already said. To me, Ethereum and Bitcoin have different price structure. Yes, Ethereum was pretty damn overpriced, but the structure remains different. It's not a crash, it's just a market that is correcting heavily. We've been losing 85% of the valuation on Ethereum, so that's hell of a pullback, okay? 85% retracement is enormous, but the structure remains different though. This is how it goes. So you don't want to trade Ethereum like you do trade Bitcoin. The only difference is the psychological effect. It's the thing that in Ethereum, to me, I'll be using psychology as well, but far less than I'll be using it into Bitcoins. I trade Bitcoin more using a lot more psychological pattern right now that I'm doing this that I'm doing on Ethereum. So Ethereum is something I do trade technically, and assessing the psychological effect in that process, I do the opposite in Bitcoins. In Bitcoins, first I want to see the psychological patterns fitting what I'm looking forward for, and then eventually I look for signal to strengthen the conviction I will have into trading. This is clearly the opposite into Ethereum. First I want to see technicals suggesting I'm right, and then I want to make sure that psychological is not going against that conclusion. I hope you get the difference. But when I do say it wasn't a bubble, it's just don't take it for the word bubble, the trading word bubble. Use it the way I see it. To me, bubble is a pattern. I don't see that pattern into Ethereum prices, but yet in the common trading world sense of that world, clearly was a bubble as we multiplied the price stupidly, getting into stupid valuations. So it's normal for us to correct 85% of those valuations, but the structures in terms of pattern is nothing like a bubble to me. It looks like a trend to corrective market. Yes, huge correction because the upside was stupid, but not the same structure as Bitcoins. So look at AMD stock. Do you think it is a good opportunity to short? Secondly, are you following Baba? So yes, Alibaba could be interesting, but I think it's been very dangerous company right now. I've traded with psychological pattern, which means it's been under pressures recently, and I hate trading those markets simply because lots of emotions. So I do use the psychological pattern out there, but there is so many markets to trade that trading psychologically on big markets is something I do. Trading psychologically into stocks themselves is a lot harder. Even though this one is a liquid stock, lots of traders in there. Okay, but why would I get myself into this, as I do have lots of technical assets to trade regarding stocks themselves, I mean. So I've got lots of stocks available to trade. Some are not emotionals, do trade upon technicals and have strong technical signals. So which do you think I prefer? Trading the psychological ones or trading the technical ones? I have a clear preference for technical ones. Doesn't mean that these will be more rewarding or whatever. It's just when I have the choice, trading psychologically is a little bit more difficult because you always have to speculate at high level. You need to think what's happening, you need to assess what's happening into other people's heads, which is very difficult because this is the hardest speculation ever. You have to put yourself into someone else's head and pick the right choice, which is not necessarily going to be the case at every time. So it kind of be more like a bet than a trade. As you can see, the indicators will be cold-blooded. They will make analysis the way a robot will do. So they're not going to put emotions out there. When I do use psychological pattern, it's not an algorithm that is telling me I see some psychological action in there. It's just me assessing that I see some distortions into psychological effects. So it's a personal feeling, which is dangerous because you can always be biased. So when it comes down to feelings, this is something you can use, but this is tricky because you can just be wrong because you're biased. Okay, so psychological pattern, I do use them when I see strong reasons to believe that I'm not wrong. Like when I saw you guys, when I saw my friends calling me over to know what the shit they should do with Bitcoins when we were right into the bubble top. Fuck it, yeah, I said, okay, now I'm right. Everybody is in there. They're all stupid noobs. They're going to lose money. So now I'm getting wrong. Now I'm going to get to wrong for them and get to short actively trading that market. But because back then, we reached out to really, really huge amount of probabilities that I would be right, and that too much retail traders were jumping into a stupid pricing kind of market, right into a bubble, and I wanted to take the money. But at that point, it remained a speculation. I had no indicator telling me we're in a bubble and people are stupidly trading. It was just a personal assessment. CNN, France accepts new ICO framework to become Europe's leading ICO hub. Okay, but I haven't heard about that, so that's possible. Framework proposed by French financial markets has been accepted in Parliament. All right, that's interesting. Confirm the acceptance on the legal ICO framework. Great, that's great. I fucking myself as a French haven't heard about that. But anyway, that's a good news. But anyway, you don't want to just trade the market because of news flow. Yes, the news flow is positive into cryptocurrencies right now, even though the prices are moving downward. So which one of those two are you going to follow? The price or the news flow? Obviously, I think at some point we might find some bullishness. At least technically, we're going to have to rebound. But do you want to buy just because the market should go up or because the market is going up? If you do have fundamentals and tech signals showing both should go up, then you can speculate to go up. Okay. So anyway, we're going to stop there. Thank you guys for showing your questions once again. I'm sorry about that. First, I'm going to terminate that show today by reminding you that I'll have additional vacations in the following days, so I might be printing them off the computer at home. So I probably won't be able to make the daily forecast. Obviously, I'll be making a market updates on trades I'll be taking profit I'll be making. So, of course, the portfolio management will still be done fully transparently throughout the social networks. So in French, in Twitter, and it will be done throughout a Telegram channel in English. The Telegram channel link is, I'm going to remind it to you, I think I've been posting that link already. How do I get myself to get the link? Yes, this is it. t.me/pro. It's a lowercase dash indicators, and you get there. You're yourself there if you want to have a portfolio management. I'll be doing it right here. If I don't do the daily updates, if I have time to make the daily updates, I'll do it. But I also want to enjoy some vacations, so I probably won't. So I'll be leaving on Friday. So Friday there will be no show. So tomorrow is going to be the last one of that week, and I should be able to make one on Monday next week before heading into Geneva. So might be one on Monday and then one on Friday next week as well. And then the week right after I'll be into Malta. So there's a lots of cryptocurrency conference out there. As you know, Malta is kind of head of cryptocurrency companies to set up out there for fiscal reasons. Among those, if for some reasons some of you guys are heading into Malta, you know about that, you can. I'll be really pleased to meet you out there, either at the conferences. As I'll probably get myself out there just but I'm not going there just for the conferences. I'm gonna go tripping out there. I'm going for vacations as well in Malta. So if you want to meet, go for a trail or whatever you want to do, I'll be pleased to meet you out there. You just send me an email. Of course, the contact@proindicators.com email just disappeared as it got stalled in the domain name. So for now, you want to reach out to me at philrx. You use that. It's phil_rx at outlook.fr. You can reach out to me at that email address if for some reason you want to be into Malta. I'm going there between the 13th of September to the 7th of October. So if you want to meet in between, I'll be really pleased to do it. You just reach out to me. You know I'm a normal person. I'm not here to sell you dreams or whatever shit this is. I'm just a human being like you are. If you want to meet like human beings are generally doing, as I said, I see nothing, and I see no reason not to do it. I'm not superior to you, and you're not to me. We're just going to share things, share knowledge, or whatever this is, or just enjoying some nice time together, or not. I mean, if you and I are not comfortable, we're just going to go our side, and that's it. I mean, but a meeting is the only way to know if you like someone or not. So let's just meet. This is what I invite you to contact me if you're near that area in that time period. Bye guys, and see you tomorrow for the last of that week.